5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A win for Alphabet. Meta reportedly in talks to spend billions on Google's AI chips as an alternative to Nvidia's GPUs. Moscow and Kyiv trade airstrikes even as President Trump cites progress on his peace proposal and as US and Russian delegations are set to meet in Abu Dhabi. And markets eyeing a raft of economic data from September retail sales to November's Conference Board survey after a blistering tech rally. So that blistering tech rally looks to be coming to a little bit of a halt today, primarily on weight from Nvidia, most likely after that Google Meta news. So we have futures pointing lower. This after the S&P 500 rose 1.6% yesterday and the Nasdaq 100 was up 2.6%. We'll see if this picture takes a turn because, of course, the other thing on markets' minds is the Federal Reserve. Let's take a look at the bond universe because we have now just a couple of weeks, not even before that Fed meeting, and odds are rising. We're up to about 75% now of a December rate cut. Because think about it, if we don't get one until January, that meeting isn't until January 29th, and that's really more than 2 months away. Can the markets really wait that long? Well, right now the 10-year yield is down to 403. We do have the 2-year yield below 450 and the 30-year yield still hanging out around the 467 mark. Mary Daly out now siding, it looks like, with a cut. And we also have Nick Timiraos in the Wall Street Journal, the Fed whisperer, of course, saying that the ground has been laid for Powell to actually make a cut in December. So we'll see how things progress. For the moment, though, let's get to some individual stock movers. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with the biggest story of the day today, which is the report that Meta is in talks to spend billions on Google's AI chips. That would be potentially a big blow to Nvidia, whose chips have been the gold standard, really, in that tech industry for quite some time. We can see that reflected in those shares today, with Alphabet up quite significantly and Nvidia down. But there will be more on that very shortly. Moving on to SanDisk, which is the newest inclusion in the S&P 500. That is a company that makes memory cards and USB sticks, and it is set to replace Interpublic, the ad agency in the S&P 500. That follows a really impressive rally in those shares, and we can see that continuing today with shares up 2.7% pre-market. And finally, let's end with Symbotic, which is a warehouse automation robotics, a company that counts Walmart as one of its biggest customers, and it is up after providing a very upbeat forecast for revenue in the first quarter. Follows a very good year for the company as well, and it is up almost 13% in pre-market trading this morning.
A nice rise there from Symbolic. Chloe, thank you. That is Chloe Melly. And coming up in this hour, we're going to look ahead to that raft of data coming this week and later today in particular with JPMorgan's Priya Misra. The AI race heating up then. Alphabet getting a boost this morning after a report from The Information that Meta is in discussions to use Google AI chips in data centers starting 2027. That's dragging on Nvidia shares. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So these would be TPUs, apparently, Tom, as opposed to Nvidia's GPUs. How are they different? Are they better for the likes of inferencing, for example?
Yeah, so they were developed in-house by Alphabet, the parent company of Google, about 10 years ago, and they have since been adapted, and they can continue to be adapted because, of course, Google, as well as having its own chips, also has its own large language model, Gemini, of course. So there's this feedback loop between how the model performs, then the developers can take that to the engineers of the chip and adjust the chip to add in those performance changes that they may need. In terms of whether or not it's better or not, it kind of depends what your specific aims are when you're one of these AI researchers building one of these models. But certainly it seems to be meeting the needs, certainly not just, it seems, of Meta, at least that's the expectation according to this reporting from The Information. We know it is meeting the needs of Anthropic, and they think that's going to work because Anthropic is committed to a deal with Google as well about being supplied with close to 1 million of these TPUs. The key standout point, Vonnie, obviously, is that it seems that Alphabet, with these partnerships with Anthropic and potentially this partnership with Meta, one of the biggest spenders, hyperscaler spenders on AI chips, it seems that Alphabet is being better positioned with its TPUs as being potentially a bit of a competitive threat to Nvidia, which essentially has dominated the market for these chips.
Yeah, exactly. So what would switching look like in this arena? I mean, is there an incentive on price? Do we know anything about how relative pricing, relative margins would be?
Well, they can work very well in terms of both training the models, but also inference. And it seems to be that is what the emphasis is for Meta in this potential deal, is they want to be able to use these chips for inference. So when we and consumers and enterprise are actually using these chatbots and these large language models, that is the process of inference, and TPUs work very well in that sphere as well. They do have to, and they will have to prove that they can meet both in terms of energy efficiency and in terms of cost as well, of course. And look, Jensen Huang at Nvidia has been very keen to emphasize that with each new iteration of his own chips and the whole package that comes with it, so the CUDA software, but also the networking that comes with those Nvidia chips, that you get those gains in efficiency, both on energy and on cost as well. And the latest, of course, generation of Nvidia chips will be coming, the Rubin will be coming out in 2026, and he says there's already strong demand for that. So this is heating up competition, but in some ways it's also a reminder this is just as much Alphabet's world as it is Nvidia's world, because not only are they performing and getting demand for their chips, they're also getting demand for Gemini 3, which of course dropped a few days ago and has had very good response, and you've seen that impact in terms of the competitive challenge versus OpenAI, and you've seen the read across to what is essentially a proxy node now for OpenAI, which is SoftBank, listed over in Japan, which has this sizable stake in OpenAI, and its shares have been under pressure. So that has SoftBank's become something of a proxy for the privately held, of course, OpenAI, and concerns that maybe OpenAI is facing more of a competitive threat from Gemini, and particularly Gemini 3.
Yeah, SoftBank shares have been pretty volatile of late. Tom, thank you so much. That is Tom McKenzie, host of Bloomberg Tech Europe. Well, staying on AI, President Trump has signed an executive order to establish what he's calling the Genesis mission in an effort to boost innovation in the AI space. Joining us now is Bloomberg's Suzanne Lynch. Suzanne, what are the details? We know that the president has been making all sorts of deals with individual companies, but as it pertains to specifically this Genesis mission, what is it?
Yeah, the Trump administration had flagged that this was coming, and this is part of the effort by Donald Trump to federalize AI investment, if you like, to try and inject some momentum, some power and some money into the federal government when it comes to investing in AI. He has in the past criticised the role of states for what he sees as holding back AI investment, and is even touting the possibility of being able to censor these states in some way for that. But I think it speaks to the fact that the Trump administration sees AI as the next big investment opportunity. Donald Trump has long spoken about the need for the US to be on top when it comes to the AI race. Of course, a lot of questions remain about the pressure this is going to bring in terms of not just spending investment, but infrastructure on the energy grid, for example, given the role of data centers in this. But it shows that the US administration is prioritizing this AI issue for now.
Yeah, that's domestically. Now, as it pertains to international space, the president has been holding calls. So one with his Chinese counterpart. Just have a listen to this, Suzanne.
I did speak with him about the call. It lasted about an hour, and it was a very positive call. The focus of the call was really Russia, Ukraine did come up, but the focus was mainly on the trade deal that we are working on with China and those relations and how they are moving in a positive direction.
So that was all very positive from the press secretary there. But on the Chinese side, the foreign ministry briefed this morning and said that, there's a lot going on when it comes to China and Japan, and that Japan's Prime Minister Takaichi hurt Chinese people's feelings, and that this 1972 agreement with Japan recognizes that Taiwan is Chinese. Do we have a problem here, Suzanne, in the sense that the president is keeping both the China premier and the Japanese Prime Minister happy?
Yeah, that's exactly what's happening here. And considering he had those two calls on Monday evening, it shows the balancing act now that is facing the US president. On the one hand, he needs to keep his ally Japan happy on board. On the other hand, he is trying to sign some kind of a trade deal long term with China and resolve the issue of critical materials exports. So I think we can see Donald Trump, who of course sees himself as something of a go-between, something of an international peacemaker, has to tread very carefully in these increasing tensions between China and Japan. Of course, Japan also has had a lot to lose here if this escalates. China is a major trading partner, and Japan also depends on a lot of critical mineral exports from China that go to Japan. So it's a tricky geopolitical issue for Donald Trump. But I think for the rest of the world, for Europe, for example, it shows that his interest is not just on the issues of Russia and Ukraine in the Middle East, but also further afield in Asia.
Yeah, exactly. And of course, where you are in Brussels, we just had the Commerce Secretary and a delegation from the United States there as well. Can you bring us up to speed on talks between the US and the EU and where we're at on any kind of deal?
Well, look, there were no big takeaways, no big results from Monday's meeting between those EU trade ministers and those two top Trump officials. And it was significant that these officials were here in Brussels. That doesn't happen that often, that they come to these meetings. But Howard Lutnick, the Commerce Secretary, was very clear in his comments to Bloomberg News yesterday that he wants to see changes to the EU's digital regulation in order to move forward on any trade deal, particularly as regards steel and aluminium. Now, the EU's antitrust chief, Teresa Ribera, last night warned that EU tech regulation is not negotiable. And she has poured cold water on the idea, the prospect that the EU could change its tech regulations. So look, let's see where this goes next. What the Europeans really want is something on steel and aluminium. They are still facing 50% tariffs, but there are also other sectors that they want different treatment for, including wine and spirits, everything from Italian pasta to other exports. So those negotiations are going to continue at official level.
Suzanne, thank you so much. That is Suzanne Lynch there in Brussels. And Moscow and Ukraine trading airstrikes overnight as a US official was due to meet a Russian delegation in Abu Dhabi. This all as President Trump cites progress on his peace proposal. Let's bring in Bloomberg's Oliver Crook for more. So as I understand it, Oliver, the 28 plan was brought down to maybe an 18 or 19-point plan, but now even that potentially isn't going anywhere. Can you bring us up to speed?
Yeah, Vani, there's a lot of confusion about the different plans that have been circulating. There was one that was proposed by the Europeans, but what we understand now is that that 28-point plan that sort of dropped like a bombshell in the middle of last week here in Brussels and for Kyiv has now been reduced to a 19-point plan after those discussions in Geneva, those 24 hours of frenzied diplomacy between U.S. Secretary of State Marco Rubio and the Ukrainian delegation. Now it seems that that living document, that 19-point plan, is what is being shopped around the world right now. And we heard from Volodymyr Zelensky speaking last night, saying that after those Geneva talks that many of the right elements had been taken into account into that framework. Of course, the Russians, for their part, have sort of dismissed this 19-point plan out of hand. That being said, one of the sort of new protagonists in the negotiations, Dan Driscoll, the U.S. Army Secretary, is in the UAE today. We understand that he met with the Russian delegation yesterday, that those talks will continue again today to try to get them on side in terms of what they need to see from this document. Of course, Trump administration and President Trump himself would like to see a deal struck by Thursday. I think that that is probably a fairly ambitious, if not totally impossible, deadline to actually strike. That being said, crossing the wires about an hour ago, we heard from some Ukrainian officials that we understand that Volodymyr Zelensky, the president of Ukraine, will be heading to D.C. in the next couple of days before the end of November in order to speak with President Trump. Because we should say, Vani, one of the big differences between the 28-point plan and the 19-point plan is that many of the most contentious issues like territory and some of the other complicated political issues have been basically removed from the document because Zelensky wants to speak personally with Trump about those in person in the coming days.
Yeah, and Sergei Lavrov saying that Russia has seen neither plan and expects to see this new peace plan after the US agrees it with Europe. We'll see. Oliver, thank you so much. Oliver Crook there, Chief European Correspondent. Now to other top stories trending on the terminal this morning. UK bondholders are preparing for the government to release a tax and spend plan that could impact their returns. Chancellor Rachel Reeves is expected to announce measures to help meet debt targets in her budget speech tomorrow. A benchmark gilt portfolio has returned almost 4% so far this year, on course for the best performance since 2020. That China-Japan rift widening. The Chinese government has instructed the country's airlines to reduce the number of flights to Japan through March 2026. The order was made last week after Japanese Prime Minister Sanae Takaichi's comments on Taiwan inflamed China. And ABN AMRO's new CEO, Marguerite Berard, seeks to slash its workforce by nearly 20% in a major revamp. The net reduction of 5,200 full-time roles is anticipated to be completed over the next 3 years. Coming up, we'll bring you our exclusive interview with the CEO of State Street Investment Management. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Investors awaiting a slew of economic data coming out in the next 2 days to gauge the potential for a Fed rate cut. Bloomberg's Katie Greifeld spoke exclusively with State Street Investment Management CEO Yie-Hsin on her outlook.
We still would very much like to see a 25 basis point cut from the Fed. We think inflation is more contained, even though maybe there's higher goods inflation. Services are softer in the housing residential sector. And at the same time, we're very worried about the employment picture. Unemployment has ticked up, hiring has slowed down, and consumer confidence is weaker. And so to really protect against this, we'd like to see the Fed take that 25 basis point cut. A little less clear as we move into 2026. We may be not calling for as much as 100 basis points, but somewhere in the neighborhood of 50 to 75 basis points makes sense to us.
I also want to talk about how investors are positioning amid all these different cross currents, because one of the most interesting stories to me, I think, of 2025 is still this red hot demand for cash. You take a look at money market funds, you take a look at cash like ETFs, the lines just keep going up, even though you do have the Fed starting to reduce interest rates here. And I wonder, first off, what you make of that and what will finally break the fever. Is it lower interest rates or is it something else?
Well, the need for income is very significant, and whether that's because of sort of developed economies, have aging populations that are looking at cash is providing multiple uses within a portfolio. It's generating income, it's dry powder should there be a major correction, and it also helps to diversify the overall portfolio. And for that reason, we think cash probably stays at these sorts of levels. May come down, but I think that might need some greater investment opportunity than perhaps investors see today.
It's interesting to hear you say that, because I talk to a lot of folks, a lot of investment professionals, and it's the most urgent question they have to answer is how do you get investors out of cash, get them off the sidelines, so to speak. But it sounds like you're saying this isn't necessarily the sidelines. That's not necessarily the way to be thinking about cash.
I think that's right. And what we're seeing is just a continuum of cash, if you will, right? Short-term deposits and money market funds to short duration and the like. And we do see some argument for extending maturity slightly in the short and intermediate term of the curve. At the moment, credit spreads are incredibly tight, investment grade and high yield. And so moving along that sort of treasury spectrum, we think is warranted. But again, it's not the same as a lot of cash moving into the market.
I want to talk about retail demand for private assets more generally, because you think about the turbulence that we've seen in the past couple weeks, of course, when it comes to private credit, when it comes to, for example, cockroaches and Blue Owl's pooled fund merger. Has that dampened at all retail enthusiasm to get access to some of these private strategies?
I think from where we sit, we continue to see investment discipline in the private credit arena. Defaults may be rising slightly, but from a very low base. And some of the big profile ones we think are more idiosyncratic. And at the same time, there's a secular long-term trend of the private markets providing credit capability and availability, given that the banks are more limited. And so the liquidity aspect, the income aspect of private credit, we see continuing to be in demand by retail investors. One area that we're focused on is in the defined contribution arena. We're one of the largest USDC managers, and we've been first to market to introduce a target date fund with a 10% allocation across private equity, private credit, and real estate. And we think it makes sense for individual investors to really participate in this part of the market that is showing tremendous value creation, yet they don't have easy access.
State Street Investment Management CEO Yie-Hsin there speaking with Bloomberg. Coming up, one story making headlines across major newspapers. We look at the progress being made in the Russia-Ukraine peace talks. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. Most major papers and news outlets leading with the latest on the Ukraine-Russia deal. CNN saying that talks are gaining momentum as US and Russian officials meet in Abu Dhabi. Now, the Wall Street Journal is looking at how the US drafted a Russia-friendly peace plan. The New York Times, leading with how Secretary of State Rubio tried to bring that plan to the middle ground. And the Washington Post is highlighting the grinding progress for Russia on the battlefield this year. Let's take a look at where markets stand now. Nvidia really weighing on this market. It's down 3.5% to the pre-market, and that's dragging on futures. As you can see, S&P futures, Dow futures, and Nasdaq futures, they're all pointed to a loss at the open, although we did see a gain for the Nasdaq 100 yesterday of 2.6%. Little weight to the Bloomberg dollar index, and the 10-year yield, now it is below 403. Of course, is there a December cut coming? Nick Timmeros of the Wall Street Journal seems to think so, at least says the ground is being prepared. Mary Daly now on the side of a cut, it seems like, as well. Let's have a look at some other asset classes. The VIX has come down a lot since we saw those down sessions, but we are still well above 20 and just a little bit on the rise today, as you can see, with stocks lower. Bitcoin, very volatile in recent sessions, above 87,000, but it was below that just a little bit ago. And no real reaction in crude oil to those sanctions being put on Russia. 58.65 for WTI. Coming up, we're going to be pushing ahead to today's data and the Fed meeting with JPMorgan's Priya Misra. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A win for Alphabet. Meta reportedly in talks to spend billions on Google's AI chips as an alternative to Nvidia's GPUs. Moscow and Kyiv trading airstrikes, this even as President Trump cites progress on his peace proposal and as US and Russian delegations are set to meet in Abu Dhabi. And markets eyeing a raft of data from September retail sales to November's Conference Board survey. This after a blistering tech rally. So let's take a look at those markets. Futures are pointed lower. We'll see if that changes in the next 4 hours, but certainly Nvidia weighing on the pre-market. It's down about 3.5%. And of course, this comes after yesterday's 2.6% gain for the Nasdaq 100 itself. So perhaps there's a little bit of give back. Let's take a look at bonds because we're going to be talking about them in a moment with Priya Misra. As you can see, we have had a little bit of movement. The 10-year yield is now down below 403, the 30-year down below 467, and the 2-year firmly at 348.32. Just a few more days to go before that December meeting. And of course, the blackout starts on Saturday. Let's get to Chloe Melly in London now for some individual movers to watch. Chloe.
Good morning, Bonnie. Let's start with the big story that's on everyone's mind today, which is the report that Meta is in talks to spend billions on Google's AI chips. And that is a big blow to Nvidia, which, of course, has the chips that have been the gold standard in that industry for both big companies, big tech companies and startups for quite some time. And we can see that reflected in those shares in pre-market trading today. This is a story that we'll be following throughout the day. Moving on to the latest addition to the S&P 500, which is the company SanDisk, which makes memory cards and USB sticks, and it is set to replace Interpublic, which is the ad agency in the S&P 500. That follows an impressive rally in the shares, which is continuing today. And finally, let's go over to Symbotic, which is a warehouse automation and robotics company. It counts Walmart as some of its biggest customer, and it provided a revenue forecast for the first quarter that was seen as very upbeat and definitely ahead of expectations. This is a big win for the company and also for that broader automation sector that has seen a little bit of a setback, including with the European peer Ocado, which has seen a little bit of weakness recently. And we are up 13% for Symbotic.
All right, a nice pop there for that company. Chloe, thank you so much. That's Chloe Melly. JPMorgan's Priya Misra weighing in on the data catch-up, saying that the absence of some raises the bar for a December rate cut. Still, she writes, quote, "We do think that a cut is more likely than not, since policy is still restrictive and risks are skewed to the downside." I'm pleased to say Priya joins us now and in studio. So Priya, we have, 10 days before the meeting. You're still thinking that a cut is more likely. Does the fact that Mary Daly has now weighed in and the fact that we get the Nick Timmeros article saying that the path has been sort of paved for Powell to cut, does that make it even more likely?
So I do think so. I mean, there is a lot of data that we're going to get today and, between now and the Fed meeting. So it's not a done deal. And there's clear divisions at the Fed. But I think if I take a step back, policy is still in the restrictive territory. Now, I think there's a lot of debate. The divisions at the Fed really come from what is neutral. And there are Fed officials who think it's closer to 4, in which case we're at neutral. And there are others that think it's 3 or a little lower. But if I look at the range, if that's the range of neutral, you're just at the upper end of neutral. So there is, a case to be made for policy is being a bit restrictive. And then you look at the labor market data, and I think that's what, Mary Daly's comments about the nonlinear slowing, it's something we've been concerned about. If the hiring pace is slowing and you're seeing a pickup in layoffs, and we are seeing some of that, we're not seeing it in claims yet, but we're seeing it in challenger, warn notices. I think the Fed really doesn't want it to become a non-linear slowing, because anytime these layoffs start, they can non-linearly increase a lot. And I think they're trying to provide some protection against that, some insurance against it. So I think just given the labor market slowing that we've seen, and even the new data that's coming, you saw the rise in the unemployment rate, almost 4.5 on the unemployment rate. I think the Fed would want to provide a little bit more insurance. And then I think Governor Waller's comments around meeting by meeting, I think that's what we're looking at next year, where if the economy does slow down more, the labor market slows down more, they'll cut a lot more. But I think provide this one more cut and then base it on data. And I think the Fed will get more reliable data only next year. So provide this one cut, then wait for that reliable data and play it by ear.
Well, there is the argument out there that, the difference between December and January is not that much. If it doesn't happen in December, it'll happen in January. But that's a 6-week gap, because the FOMC meeting doesn't happen until the very end of January, at which point we might even be looking at another government showdown or what else have you. Would it make much of a difference to the economy if it had to wait 6 weeks for a cut and the labour market was getting more fragile?
Yeah, monetary policy works with a lag. So whether they go in December or Jan, even though it is 6 weeks, it may not matter as much. I think it's the messaging from December. So if they don't cut, but we get the press conference, we get the dot plot, and if in that the Fed suggests, and Chair Powell suggests that another cut is imminent, I think it really won't matter. If the messaging is that we're at neutral and we're worried about inflation or fiscal easing in the coming months, and the Fed might be done cutting, at that point, I think you are going to get rates moving, and that's going to, I think, filter through sentiment across markets. So it's more than just that rate cut. I think if they don't cut, they still signal cuts in the dot plot. So I think the market may take comfort in that.
Is there any concern for the current leadership that, sure, they've done an insurance cut, and yeah, maybe it would be nice to do another insurance cut, but given that the Fed is very likely to skew a lot more dovish next year, perhaps hold back on a cut, and then maybe the economy won't suffer too much if there are too many quote-unquote cuts next year?
That's a fair point, I think, but if you listen to Fed speak, I think the concerns around independence seem to be a little less. The chair is extremely important. The chair will build consensus, and so the chair decision is really important. But we've heard from so many Fed officials with different views. And so I think there's clear divisions at the Fed around risk management and which is a bigger risk, inflation or the unemployment rate. But I think this is a message to any incoming Fed chair, that they've got a committee with views, diverse views, a vocal committee that's not just saying what the chair wants. I actually think it's improving the idea of Fed independence, that you can get, even if you get a very political Fed chair who's skewing dovish, the rest of the committee might entirely take the other side. And it is a democracy, it is a committee at the Fed. Everyone has the same vote. So I actually think this whole debate, this very public debate from the Fed, whether inflation's a bigger risk or unemployment rate, actually makes the Fed look more independent, and it makes the Fed chair's job to bring consensus so that you don't have a 6-6 dissent type issue.
The bond market has been very well behaved, actually, through all of this, right? I mean, when you think about it, so sure, we've been moving a few basis points here and there, and the odds definitely have been moving way up from, just more than 30% to sort of 75% of a cut. But the 10-year yield is still in that range that you talked about, 375 to 425, right?
And we got a lot of pushback with that range, because people were saying, why can't we get to 5%? Look at the deficit, sell America. Well, I think we're not seeing Sell America. We have auctions every other week, and the auctions are going okay. So, yeah, great point that bonds have been extremely stable. I would also say bonds are doing what bonds should do. They're giving you income. There's a reason why it's called fixed income. They are giving you that coupon income, and they're acting as a diversifier. I mean, we saw this last week. You had these days where equities were struggling, bonds were acting as that diversifier in the portfolio. So I think one of the reasons why bonds have been so stable is people are seeing that diversifying aspect of bonds. And so when they are over-invested in equities or they get a little nervous about being too positioned too long there, they're buying bonds. So I think we are seeing that demand. High quality bonds, so I think investment grade, high quality, high yield treasuries are seeing that demand despite a lot of supply. There has been a lot of supply.
Are you seeing a lot more inflows? Are you getting a lot more, phone calls and questions since the AI bubble talk started?
We are seeing inflows. And I think it started even before that, and it's absolutely increased because people are seeing price action. I mean, you might have a view, but when the market confirms that view, it makes you feel better. And so we are absolutely seeing inflows, a lot of inflows from passive to active. And I think that makes sense because dispersion is picking up. I think this is not the time to be in passive anything because, this is not a case of the Fed's easing to dovish territory, all assets will go up. I think you're seeing that dispersion with company earnings, so whether it's equities or fixed income, but we're seeing passive to active. We're also seeing people saying, well, if the Fed's going to keep cutting cash, which felt really safe at 5% Fed funds, and now, you think, oh, well, maybe it's going to go to 3%. So we're also seeing money from money that was on the sidelines saying, you know what, let's extend out the curve because duration is less risky now because inflation is less of a concern. I mean, we did get that CPI report and all of the data suggests that inflation is slowly but surely getting to 2%. And inflation is a problem for bonds, but I think we are seeing the inflows from all sides.
And I know you're not expecting it to re-accelerate. Priya, thank you so much for coming into studio today. That is Priya Misra of JPMorgan Asset Management. Now to other top stories trending on the terminal this morning. President Trump still working on a proposal to address a spike in Obamacare health insurance premiums. The White House has not confirmed when the proposal will be unveiled. Treasury Secretary Scott Bessent had said it would be announced this week. Apollo CEO Mark Rowan has rejected the notion that adding private assets to retirement and insurance portfolios can pose a systemic risk. Rowan said, quote, "People have really just lost their minds and the headlines get more and more hysterical." Rowan told investors that most private credit held by insurers and pension fund buyers is rated investment grade. Michael Burry is standing by his criticism of Nvidia after the company pushed back on his analysis of its stock-based compensation dilution and stock buybacks. Nvidia and rival AMD have sparked concern among some investors by making so-called circular deals with AI providers. Coming up, trading attacks. Russia and Ukraine carry out airstrikes overnight, just as President Trump cites progress in a peace deal. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Just hours after President Trump struck a positive tone on prospects for a ceasefire deal, Russia and Ukraine exchanged fire with heavy air raids on Kyiv and southern Russia. This as delegations from Washington and Moscow are set to meet in Abu Dhabi. Bloomberg's Suzanne Lynch joins us now. Suzanne, peace plans are being thrown around. Russia says it hasn't seen the first one, it hasn't seen the second one, and yet these airstrikes continue. Is there any hope to be placed in this particular peace process?
I think there is renewed relief around the world that the initial 28-point plan that was presented by the US has, it seems, been amended in some way, has been pared back and is now reflecting more of the Ukraine perspective on this. I think it's fair to say that Ukraine and US international allies were taken aback by the content of this plan. And those talks that happened in Geneva on Sunday did appear to make progress. Now, as you heard there, Donald Trump himself is predicting that some progress will be made, but a lot will hinge on the Russian response to this revised plan, with that meeting taking place between a senior US official and a Russian representative today in Abu Dhabi. But it does look for the moment that the initial Thanksgiving deadline for which Ukraine was under pressure to reach a deal, has now been pushed back, and these talks will continue for some time.
Well, at least they're talking. I mean, in another theatre, there's talk as well, but it's just annoying everybody, apparently. China and Japan trading barbs. China's foreign ministry out this morning saying that the people's feelings were hurt. I mean, it's getting very emotional. But President Trump has spoken to both leaders and apparently had a good conversation with both leaders. Can he calm this spat?
This is an interesting moment for Donald Trump when it comes to Asia and his Asia policy. He is really trying to strike a balance here between two powers, China and Japan. Japan, obviously an important ally. Donald Trump wants to keep them on side. At the same time, he is looking to find some kind of a longer-term trade resolution with China, and is expected to meet Xi next April. So quite a delicate balancing act here for the US. Donald Trump, as we know, sees himself as something of an international peacemaker, but this escalating situation between Japan and China is yet another challenge, and one that has to be treated delicately.
Yeah. And then domestically, the president has decided to take on AI. He signed what he's called the Genesis mission to boost innovation with AI. How is this Genesis mission going to work, Suzanne?
Well, look, this executive order had been flagged for a few weeks by the administration, and really it is an effort by the Trump administration to federalize, if you like, AI policy, to try and bring these different operators or different regulatory systems and different investment ideas behind AI together, and to give more of a role to the federal government in terms of regulation. Look, Donald Trump is saying that this is akin to maybe the space race, that this is a big moment in terms of harnessing scientific, technological power and ensuring that the United States is on top when it comes to the AI race. Of course, the US is not alone in this. All countries around Europe, around the world, in Europe, Japan, we've just been speaking to, and of course China, are very aware of the opportunities offered by AI and are trying to get ahead in this race. So I do think this is an important marker by the US in trying to advance this. Let's see, does the investment go? Does the investment flow? Yes. And the regulatory system adapt to make this happen?
Suzanne, amazing context. Thank you so much for joining us today. That is Suzanne Lynch. And sticking with technology, Alibaba just out with its earnings, revenue topping estimates thanks to AI and cloud growth. And you can see the ADRs there moving pre-market pretty nicely, up more than 4.5%. Bloomberg Tech Europe host Tom McKenzie is back with us. So how did Baba do it, Tom? Where did it exceed expectations?
Yeah, Vonnie, an interesting timing as we talk about those tensions between Japan and China and the moves by President Trump to secure the lead that the US currently has when it comes to AI, because Alibaba really is a litmus test in terms of how far and how effectively China is particularly pushing the adoption as well as the innovation around AI. So the top lines on revenue, yes, it was a beat. E-commerce was also a beat for Alibaba. This is a stock that's already up about 100% year to date, so it's had a massive run up. But the focus of scrutiny really is on how it is delivering on AI. And the key part of the business, because this is a multifaceted business, Alibaba, the key focus when it comes to AI is the cloud intelligence unit. And there you saw growth of 34% growth in terms of the cloud infrastructure bit, showing that demand from their end consumers and enterprises in China to ensure that they have access to those cloud offerings of Alibaba. So that is good news. We're also hearing from executives saying that they are going to be investing free cash flow into future innovation. So read into that AI. This is after 4 straight quarters where CapEx and spending on AI infrastructure, according to executives, came in at about $17 billion US. This is a company as well that's had recent success with its own relaunched chatbot, with a lot of demand from Chinese consumers for that as well. So it seems to be Alibaba continues to be well positioned to lead domestically in China when it comes to the AI story, a company that has really reshaped and reformed its focus around AI innovation and getting it into all of its end products and users.
And of course, huge competition for Alibaba with Tencent and Baidu as well. And speaking of competition, here in the US, Alphabet is gaining because Meta is going to use its AI chips, its TPUs, as opposed to Nvidia's GPUs. And Nvidia is down more than 4% pre-market. Is this a harbinger of things to come, Tom?
Yeah, this is according to reports that this potential deal is being struck by, of course, Meta, a company that's one of the biggest hyperscaler spenders out there, with potentially up to $100 billion being spent next year just by Meta alone on this AI infrastructure. So the reporting suggesting that they have struck a deal with Alphabet to get access to those TPUs. It may not be that Alphabet actually ships the hardware, the chips, to Meta. It may be an infrastructure story similar to the kind of deal that we've had between Anthropic, of course, a key rival to OpenAI, which recently secured access to about 1 million of Alphabet's TPUs. Those are the in-house built chips on which Google and Alphabet have been training their own Gemini model, as well as the inference as well. So it seems to be further evidence that customers and end users of these AI accelerators are looking to diversify away from Nvidia, and hence the pressure on that stock.
All right, Tom, thank you so much. We'll see how everything trades throughout the session. That is Bloomberg's Tom McKenzie. Retail earnings also on deck this morning. We're going to hear from Best Buy, Kohl's and Dick's Sporting Goods, all before the market open. Let's get a preview now from Bloomberg's Maddie Parker. So, Maddie, we've seen how the consumer has been faring from some other big retailers. What about these ones? What can we expect from these big retailers?
Yeah, exactly. So if we look at Best Buy, that's obviously one of the big results coming out today. The good news for Best Buy is that we're finally seeing some signs of sales growth kind of emerge. We've had a very rocky 4 years, but in the last quarter they were able to reverse that, and we're expecting to see that momentum kind of continue. This is clearly one of the key back-to-school periods. This will benefit Dick's as well. So obviously people are buying laptops, they're buying tablets, they're buying sports equipment. So hopefully that will come through in some of these results. In terms of Kohl's, which is obviously another key result coming out today, things are looking a little bit more difficult. We are expecting to see same-store sales decline. They reported declines for the first half of the year, but clearly it's been a difficult time for the brand. They've had a lot of CEO turnover. So I think these results will actually be more of an indicator in their case to their new CEO, who was appointed just yesterday, in terms of how they're going to navigate this time.
So as always, some idiosyncratic stories and then some stories about the US consumers. So how is the consumer looking as we head into the Thanksgiving and the broader holiday season? Still a K-shaped consumer?
Yeah, we sort of, the kind of story of the whole year has been a lot of, negative consumer sentiment. Clearly, there are big macro concerns that are hitting the consumer. Things like, very stubborn inflation and unemployment, and also things that retailers have been warning about for a long time, like how tariffs can impact prices. Having said that, there are definitely stories coming out lately that American consumers are actually likely to be spending more this Christmas than last Christmas. We think that people are actually a little bit more positive about their finances than we might think, and hopefully that will come through, in sales and kind of give some hope to retailers in this festive period.
All right, Maddie, it's going to be a busy day for you, but thank you so much for making time for us. That is Maddie Parker covering all your retail earnings. Well, coming up, we'll get you set up for your trading day with more of those earnings and lots of economic data on deck. This is Bloomberg. Now, a look at what's ahead this Tuesday trading session. Huge consumer theme today. We're going to hear from several retailers, Best Buy, Kohl's, Dick's Sporting Goods among them. But we also get September retail sales data out at 8:30 New York time. Maybe a little stale, but we do get the Conference Board Consumer Confidence Survey out at 10 a.m. Eastern, and that's for November. A few micro movers, as you can imagine. Google and Nvidia both moving on this report that Meta is going to use Google's AI chips instead of Nvidia's GPUs. Nvidia down 4%. That'll weigh on this market. And then SanDisk up 2.6%. It's up more than 500% already this year, and it's replacing Interpublic in the S&P 500. Take a look at the macro picture for your Tuesday session. Futures pointed just a little bit lower, though well off their lows, and the 10-year yield at 4.03. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.